Now, getting financial advice in this day and age is essential to make whatever yours we do have stretch a little bit further. David Quinn from InvestWise joins us now. Key questions you need to ask when buying financial products such as mortgage protection or life insurance. Morning, David.
Morning, Aidan.
And this is a minefield of an area, and a lot of it obviously boils down to commission. And you see these signs, independent advisor, and you go in and you get the feeling that sometimes, hang on, he's steering me into a product here, or is he? And then you sort of relax and you sign up, not realising that perhaps he has deliberately steered you into his favourite company because he gets a bigger commission. Do we know how much these guys are getting?
We do. Well, I guess the industry knows, but for a consumer it's very, very difficult to know, because even as an experienced advisor, I find it difficult sometimes to go through the complex different structures, and I guess maybe it's not deliberate on behalf of the product providers to make it complicated, but it certainly makes it very difficult for a consumer to know exactly what the advisor's getting and what are they paying in fees and charges for your average pension product, for example.
Is there an industry average? I mean, supposing for argument's sake, somebody decides, right, got to start a pension, don't have a family yet, but I'm going to put a good whack in, I'm going to put €500 a month in, and I'm going to do it now for the next 30 odd years. Yeah.
I guess the typical fees for a reasonably priced pension, for the last 10 years anyway, have been that 5% of the premium disappears as commission, and 1% of the fund every year goes either to the investment management company, the life assurance company, or the broker.
Wow.
And obviously the 0.6% government levy is on top of that as well.
Yeah. So there's a lot of money coming out of it.
There's a fair amount of money. Now, there's work to be done, so there has to be charges with these things, but they will be considered high in international standards.
But it's kind of win-win, because if I get a taxi and the taxi doesn't fulfil its trip, I don't pay him. If I buy something and it doesn't do what it says on the tin, I get my money back. But these guys, the money goes up, they win. If the money goes down, I lose, but it's my money. Yeah,
there's no such a thing as a performance-only investment product. I haven't seen a product like that anywhere in the world, really. I guess there has to be a base charge for administering the structure.
All right.
But you're absolutely right. If the fund goes down, they still take their fees, and they might, if you're lucky, apologise, but they're certainly not going to give you back some of their fee. That doesn't happen, unfortunately.
Incredible. So if you shop around wisely, and we get to the important questions you have to ask.
Sure.
If you shop around wisely, and say you're doing that 500 for 35 years or for 30 years, you'd make a huge saving.
Oh, yeah.
Depending on which policy you pick. Or will they argue that, well, actually, you'll make more on this policy because it performs better?
Well, they all make claims of performance, but at the end of the day, none of them really beat the market performance. So sometimes I wonder why clients actually pay investment managers to try and beat the market, when none of them ever do.
Right.
But I've run figures for clients in the past where I've seen tens of thousands of euros being saved by just going into a competitive pension product. Not the cheapest on the market, but just a competitively priced one.
Okay. And how do you find the guy that's going to sell you that?
Well,
how do you know he's the guy, or how do you know it's the most competitive?
It's very difficult. There aren't many, because the commissions can be so high on these things, and because it's lucrative to sell the products, it's very difficult to find someone who's going to tell you exactly how much you can save and what you could get on a nil commission basis, for example.
All right. So if you go into one of these guys or one of these companies, one of these girls, and you decide you're going to buy the product, win, lose or draw, you're paying.
Yeah.
That's the basic. You've got to go in with that. So don't think if you're putting 500 quid a month in that you're getting 500 quid in that pure investment. There's fees and stuff coming out of that. Yeah,
it's very important to know from the outset that you're paying, no matter what happens, and no matter what you're told. A lot of times people are told, well, I'm getting paid out by the life assurance company, but at the end of the day, that is coming out of your money. All right.
So what sort of questions should you be asking the guy or the girl that you go into to sell you, who's going to sell you one of these products? What are the key questions to kind of suss them out?
Yeah, I have 5 basic questions that I like to mention to people when they ask me that. The first one is, how are they getting paid?
Right.
So when they're sitting in front of you, whether they're in the bank or whether they're an independent financial advisor, how much are they getting paid, and how are they getting paid? And ask them to detail that out. And the best way to find that out really is to say, what would this product look like on a nil commission basis?
Ah, very good. Okay, yeah.
So if you say, if there was no commission on this, what would it look like? What's your pension projection?
Yeah.
And then the commission that you're proposing, show me the two together, and then you can make an informed decision.
So if you're investing, say, 100 grand with these guys over a number of years in a pension fund, how much of that are they actually getting? Roughly, even from lowest commission, highest commission?
Typically, if there's a 100 grand fund being invested, they get 3%.
Wow, okay.
Yeah, and the way that works, it's kind of hidden in that The life company will pay that up front out of their investment management fee, and then you're stuck for 5 years because the life insurance company has to make that money back.
Yeah.
So typically on a €100,000 amount, they're getting 3%. On a pension contract where it's over a period of time, they can be getting up to, at the highest commission levels, 25% of the first year.
Goodness me.
But there's very few taking those high commissions now.
Right.
But still, they'd be expecting to get maybe 5% of the premium.
This is a bit of an eye-opener. It's quite shocking.
Yeah, it's important to know those figures and make an info.
Can you haggle with these guys?
Absolutely, you can haggle. Yeah, and really, I feel the best way to deal with a financial advisor is to make sure that it's on a fee basis.
Okay.
So that you're paying the advisor directly, and then you can strip out any of the kind of commission.
And will they do that? They'll say, right, we'll do it on a no-commission basis?
There are advisors out there now that will work on a fee basis.
Okay.
And that's becoming common practice in the UK and Australia and countries where commissions are banned now.
All right, and we won't see that happening here for some time, or will be? The industry's hardly going to lobby for it?
The industry are trying to protect commissions for sure, but it's being mooted at a European level.
Right,
so
okay.
if the Europeans decide it's the right thing to do, it may end up happening here whether we want it or not.
Now, what about payment protection insurance? We see in the UK there are thousands of these cases, and there's ads on the telly, every second ad, some of the channels asking for, call us.
Yeah.
We'll get you your money back.
Yeah. Certainly it's been big business in the UK. It's really only starting to happen here, but because it has been so high profile in the UK, the regulators and the banks have been proactive in moving the process on. So I suggest people contact the product providers directly.
Okay.
There are lots of payment protection insurance advisors out there, but they get 40% of your claim in the event of a successful claim. So.
Okay, all right. Fascinating stuff. We could talk about this forever. Unfortunately, we're out of time. David Gwynn of InvestWise, thank you very much for joining us this morning.